I am Natasha Ratliff with Natasha Ratliff Real Estate. I am on my way to a closing, so I'm doing some final check-ins on one of my clients' houses. So I am on the move. We are trying to help everyone try to get his home as quickly as possible and with less effort. We do believe that everyone can have a home, so we wanted to bring Datavia Smith on from Marine Credit Union, who is going to be able to answer questions. We do have a few that have asked already. If you join in on the replay, don't hesitate to make a comment because we can then go ahead and answer those in the comments area as well too. So I'm going to let Tay take over so we don't waste any time, and he's going to take it from here. All right, you got the floor.
Great. All right. Well, Natasha, I appreciate you having me here today and allowing me to speak with folks and get them going on the process. One thing I always want to do is just qualify myself, give people a little bit of background of where I've been and what I come from. And so, first of all, like in my family, there hadn't been a lot of homeowners. I would say we didn't have a lot of financial literacy growing up outside of, hey, pay your rent, pay your utilities, and go to work. And past that, no one really taught me or I understood how credit works, how to use it, how you build it, how you fix it after you mess up, and the things I need to do to ultimately buy a home. Because in America, that's going to be the number one way to generate wealth and security is by home ownership. What I like to do is I've written a few things down that I want to talk about to help you get there. And I want you to know that one of the reasons why I could talk about these is that I do it in my everyday career in mortgage. I've worked in mortgage, insurance, I worked in credit repair, all types of different fields, but mostly centered around credit and finances. And I've done it all. I've went from bad credit to good credit, back to bad, and back to good again. And one of the things that's helped me through it is making sure that I understood it, so that when I got to a point that I had the credit that I needed, that I was able to keep it by making sound decisions. So a lot of times I get a lot of people that come to me or they come to Natasha and they would say, "Hey, I want to buy a house," and they've never bought a house before, and I'll tell you that other forms of credit that you would get almost don't prepare you for what it would take to buy a house. So the number one thing is that, are you financially prepared for even just the process of getting the loan? I know that when I went and I bought a car 2 weeks ago, I went to my bank. They had pre-approved me. And I went to the dealership and they approved. But pretty much what happened, we figured out a price. They ran my credit, and then they were like, "Okay, here's your car." And it was such a quick process that a lot of times when people are coming to buy a home, they almost imagine it's going to be like that. Like when you go online, you go to a website, enter in your information, and they say, "Okay, you could qualify for this, and this credit card." And you pick one, and 5 minutes later, you have an approval in your email saying you're approved with a $700 limit. With a home, the process is a little bit different, because keep in mind these are going to be, 15, 20, or 30-year loans. So underwriting is really going to look at, are you what have you been doing the last 5 or 6 years? Can you afford the home now? Is there anything that can happen that you won't be able to afford it later? So many times, because the process takes 2 to 3 months from the time you apply for a loan till you find a home and you close, and you're going to constantly be recertifying your payroll checks. You're going to constantly be sending in bank statements and things like that. You got to make sure that you're prepared for the process. You want to make sure that you have understand a down payment. There are a lot of programs out there where they can help you with down payment, or maybe some zero down, 3.5% down, 5%, 10% down. But you want to make sure going in that you understand the type of loan you can qualify for and what you're going to need for a down payment. So many times the process starts 6, 7 months out before the initial application, just so that you can understand the loan. So make sure that you're prepared for the process by understanding the loan that you're going to have, understand what down payment that you need, and also make sure that you're in a position where you're not living on credit. I know for there was a long period of my life where pretty much every month I was spending $100 or $200 on a credit card to pay things like utility bills, and then when I'd get any extra money overtime, when it came time to buy a house, then in the very beginning I had no debt, but within a month I'm spending on credit cards because I'm not financially stable enough to not live on credit. So we want to make sure that we're in a position that credit is our emergency. Using credit cards is how we pay for extra things. We have a flat tire in the middle of the night, and you won't, and you need to pay a tow truck. And then the main thing you also want to make sure that you do is have reserves. So many times, someone will come to me and I'll say, "Okay, you're going to need 5,000 down." And so the second they get $5,000, they come back to me, and then when I go to look at their finances, I say, "Yeah, you have the 5,000, but you have no money outside of that." So we have to make sure that you not on- you it's safe to make sure that you have the down payment you need, plus at least 2 to 3 months of that payment and savings before you go to look for the home, before if at all possible, before you apply. Because these are things that when it goes to underwriting, and underwriting is basically the bank has that people that look over all of your finances, and they're going to look at that and say, yes, they have the 5,000 down, yes, they have the credit, but they don't have any reserves. And so those are some of the big things that I say you want to be prepared for the process. Next, we'll talk about is our credit challenges. With most of the people that I work with at Marine, we're a second chance lender. So we work with a lot of folks who've had credit issues in the past, whether it's liens, bankruptcy, they've had collections, things like that. And we really work with folks to try and get them in a loan, even though they have these. The main thing I try to do is tell, like, we work with people who are on the way up. So if you've never paid for anything in your life, and then we probably won't be able to get a loan for you right now. However, the number one thing I want to tell you is to start now and not to give up. Because as you begin to work on these things, if you have collections out there, you take care of them. And whether that means to let pass, whether that means to pay them off, whether that means to even just make payments on it, you need to start now. I have so many people that come to me and they say, my credit's terrible. Get a place in 6 months. Like, okay, well, let's start now with our credit issues, because at Marine we want to make sure that you understand your we want to make sure that you understand what your challenges are and what you need to do to fix them, and what mistakes you've made and how we can correct them going forward. Speaking personally, I was the type who'd get mad and not pay something. So if I went to Sprint and said my cell phone ain't working, y'all supposed to fix that, and they don't, I would just drop the phone off and walk out the door and say, I'm done with Sprint. It's time to go to US Cellular. And what would end up happening is that I'd win the day, but they'd win the year. Because ultimately, just because I got mad at what they did, it didn't negate me owing the money or the contract that I'd signed. to get the phone and get the credit. So you have so it's for so for me it was a lot of times decisions like that. Like I didn't feel they performed right, so I didn't feel I should have to pay them. Well, the problem is that credit doesn't work like that. That even though personally we feel like we were wrong, and there's no question you may have been. The reason why I brought up Sprint because I had an issue with them not even 6 months ago and left their service, and they had all these extra bill everything they were sending me. But I was closing on a house come August, and if I'd have got mad and just said I'm not paying you this $300, then I couldn't have got that home. That $300 would stop me from getting a home in August. So we want to make sure that we're making good decisions, and we're taking care of our credit challenges starting now. Next, be realistic about your situation. I want you to understand, what like are you are you working right now? How long have you been on your job? Can you truly afford this, and what's your timeline? So many times, some of us we've been working a job, and let's say we've been making $10 an hour for, you know, 3, 4 years, and all of a sudden we get a job and we're making $17 an hour. So the first thing we think is, I can afford the home now. But you have to understand that this is all new money, and with this now that you're making $17 an hour, is this something that's going to continue? Uh, are you working somewhere where you're being overpaid for the market? And if you lost this job, would you be able to replace it with something similar and with similar pay? Not only because we're signing on to a multiple decade loan that we are focused on what we can actually pay, even if we lose this job. Will my next job be comparable and being real? And also understand um, and also understand what our timeline is. That sometimes we fall in love with a home and we're like, I want this home now. There's probably gonna be multiple offers on it, and I want to get in there and I want to get it. Well, that might be true, but you might actually be 6 or 12 months off from actually being able to reasonably afford that home. I guess to be realistic about our situation, what our job is, our affordability, but also the timeline we have for getting a home. And folks like myself and folks like Natasha, we work with people for long periods of time. I have people that I've been working with since March, and we're working on a plan that's going to get them a home, next April, and we've been working. We're going to work for over a year, and there's some people that we'll need to work with for 6 months, for 6 months to get them there. And so, and we're going to help you. We're going to be resources. We're going to be available. But the hardest thing I know, speaking for myself, is when people aren't realistic about what their situation is, what they can afford, and their timeline. So, in that brings me to number four is just you need to make sure that you understand the process and use someone that can help. One of the reasons why I wanted to do this with Natasha is because she's so good at helping you along in the journey. She really understands it. There's not a lot of questions you can ask that she wouldn't be able to answer. But also, she's going to be able to help you along the way. And if she doesn't know the answer, she's going to figure it out for you, and she's going to figure it out for you and get it pretty quick. So we want to make sure that we understand the process. That yeah, we might get approved for a loan, and we might find a home then. We might even find a home we put an offer in. But there's a lot of things and a lot of moving parts that need to happen, and you want to make sure that you understand, what's going on. That what is clearing title? What is an abstract, and why do I need it? Um, we need to get an appraisal. With some loans, we need to get an inspection. And what's the And what's the difference? A lot of times people don't know there's a difference between the appraisal and the inspection. You know, what am I paying for when I'm closing? What can I shop for versus what can or what fees do I have to pay, and what can I shop for and get elsewhere so that I may be able to pay less. Those are some of the type of things that you want to do when you understand. But also, lastly, I guess I want to go into what we do here at Marine that's a little different. I work with a lot of financial institutions. Many of the major financial institutions and brokers, they come to myself, they come to another, we have Scott Maloma, and they come to us when they're unable to get the approved, or maybe they're in a unique situation that maybe another financial institution can't do. So I'm not going to come in here and say that I'm going to Bank of America or U.S. Bank or Wells Fargo or any other credit union is bad. No, there's a lot of great places out there. At Marine, we do something that's just a little bit different that gets a lot of times people loans that aren't able to get them elsewhere. And really, what they base a lot of on is credit and uh, and capacity. Can you afford it, and is your credit really good? We have what we call the four C's. And if anybody wants to reach out to me, I'll be happy to explain them more. But pretty much what it boils down to for us is credit, capacity, collateral. But the number one thing is character. So what we look at, and I'll talk about character last because to me it's the most important. One of the things that I talk about credit first because it's the least important for us. For us, what credit is all it does is decide your interest rate. When we pull a credit report, we look at their credit report and we look at the score because the score is going to tell us what interest rate you get. Next thing we look at is capacity. That's affordability. That's are you able to pay for this month in and month out? And so we really take a deep dive into what your finances really look like. So we're going to get 60 days pay stubs. We're going to look at your bank accounts. We're going to see what you actually have going out and see if you actually have the disposable income to afford this. We're also going to look at what are you paying right now and have you been successful with it. So if you've been paying $1,200 a month and you're looking at a price range that's going to lower that to 900, then we're going to be like, okay, the capacity is there. If they're paying for 12, they'll most likely be able to get to 9 too. But we also have other formulas figuring out the income. Next is collateral, and that's what Natasha's going to figure out for you. She's going to find you a place that fits within what you were approved for, but and so make sure you have a good piece of collateral, meaning the home is going to be able to support this loan. And so the number one thing that we look at is character. So when we look at a credit report, we're not looking to say have they ever missed payments, have they ever done this. We look at what does their character say. So how long have you been on your job? That shows character. If you've been on your job for a long time or in the same field for a long time, then we know that you have a high amount of character and in your work or what you do. So or else you would just bounce around and quit every time you got mad about something. We're going to look at not if you had um, uh, not if you've had mistakes in the past, but what are you doing about them? Because we understand that bad things happen. We understand that at one point in my life, I went through a divorce and I pretty much lost everything I had. All my credit cards ended up getting maxed out, and I couldn't make the payments. My house ended up being foreclosed on. I had a lot of these really insanely personal things happen. But as soon as I put myself in a position to get out of it, I went back and I paid those cards. I went back and there was a difference from when they sold the house versus what I owed, and I paid that. If you file bankruptcy, Like, okay, so you filed bankruptcy, you're in a situation where you couldn't pay these back. That's not all bad. These things happen to good people, but since then, how have you taken care of things? Have you made sure that you made all your payments on time? Have you fixed those habits where you said, you know what, I got in a bad habit before, but now I'm going to create good habits, and I'm going to make sure I'm responsible for my credit cards. Those things all speak to character, and um, also when you have negative things on your when you have negative things on your credit report and we pull it, are you honest with me about what's going on? Were you when you missed the payments, were you honest and said, you know what? I got mad and I just didn't pay it. Or you said, hey, you know what? I got hurt at work and it took a while to get back to work and I didn't have any income, so I missed those payments. Or are you saying, or I got, or are you saying to me, I don't know what that is. I've never seen that before. This is crazy about it. Or are you looking, and that does happen sometimes, but are you looking at me and saying, you know what? I've never seen that before. What did you say the name of that company was? I want to call them and find out what this is. So for us, we look a lot at character. Are you doing these little things that's showing I'm trying to move forward? I'm getting a handle on this, and we're going to help you. And that's when we're going to help you, and that's when we want to help you. And whatever your challenges are, and Marine, we're going to work towards fixing that. So if you need to build credit, we've got programs that help you build credit. If you need to, we have financial counselors that can help you budget and help you save. Some people, they either never had a bank account or maybe they had issues with them before. We have started checking accounts, started savings accounts for folks rebuild, to help rebuild themselves and get you to a point to where you're going from a position of financial need to ownership. And so that's basically what I had. If you have any questions, reach out to me on Facebook. I have a lot of folks that reach out to me through Facebook on Messenger, or they just send me a friend request, and I'm more than happy to talk with them, and more than happy to talk with them, help and understand that we help you in all kind of ways. We do everything from personal loans, car loans, homes. We do all types.
Okay, now say they did have a question someone sent to me
Yeah.
about um, how many times can your credit be pulled before it starts to hurt your credit score?
So you have
Like the
three
time
days.
frame.
So so I know TransUnion, I believe, is 45 days. One of them 60 and one's 30. For me, the general rule always is 30 days. So if you're getting, and it's 14 days for an auto loan.
Okay.
So from the first day you get your credit pulled for a mortgage, they understand going to shop around. You can get as many pulls for the next 30 days without it affecting your credit more than one. So
Okay.
if you get one today on 10/15, then
Hmm.
you can have as many mortgage companies pull as many as you want until 11/15. It only counts as one. If it's an
Okay.
auto loan, then it's 14 days.
Okay. What's the time frame if they have a bankruptcy or foreclosure?
We don't have a time frame. So at Marine, we don't have a time frame. We're just typically looking at what you've done since then. So as long as that bankruptcy is discharged, and as long as you have any judgments or liens from the foreclosure. So and it's pretty easy. If you look on their credit report, if it shows a zero balance or says redeemed, that typically shows that you don't owe anything else, that you don't owe anything else on it.
Okay.
I do know that for like FHA loans, a lot those are in USDA. Those are 3 years.
3 years. Okay. So 3 years from when it's redeemed that they can start shopping for a home.
It's 3 years from that was actually, yeah, that was actually closed. So there was actually foreclosed on. So you might have gotten out. They might have got you out of there in June, but if they don't sell it till September and actually close that out, and it's no longer in your name. They've had the sale and all that. It's been foreclosed in
Okay.
September.
Okay. And it's the same for bankruptcy too?
Bankruptcy is typically 3 years as well. Like I said, with Marine, we don't have a date.
Okay.
But for an FHA loan or a USDA loan, those are typically 3 years as well. 7 for a
Okay. And since you don't have a score, the four C's that you mentioned are how you determine if they are eligible for one of your loans.
correct. And if they hit 3 out of the 4 C's, we can typically get them a loan. So if they have high credit, good capacity, good collateral, or I mean high character, good capacity, good collateral, but maybe their credit isn't all the way there, we can help. We can typically help with that. If they have good character, really good credit, and they have good capacity, we can deal with subpar collateral. So if they have a unique product, it's hard to gauge. They really want it, but they have good credit and good high character, and they can afford it. Those are usually loans we can work with as well. I've gotten loans as low as 560 approved,
Okay.
and on up to over 700.
Okay. All right. So then let's talk about down payment. So how can we help
Absolutely.
them down payment student loans? And I think that would be probably a lot to handle after all that good knowledge so far.
Student loans. I'm going to tell you this: that down payment, like there's city programs, there's some programs through the county or the state. There's a lot of times there's city programs depending on where you live. You can get it as a gift. You can save it. You can save it. If you get a good tax, you get it. Like when I got my first home, I got a tax return 1 year, paid off all my debts, and next year that tax return was my down payment.
Okay.
But I am happy that you brought up student loans because that's the biggest hurdle
Yeah.
for most people,
Especially right now with the
especially right now. And I'm going to tell you that I just got a home loan, and I had 50 grand myself, and my wife had 30. And I'm going to tell you that what you have to do is, I know that they can defer the payments and do all that. You've got to get on an income driven repayment plan, because with
Mhm.
Marine, if we can see what the payment is on the credit report,
Okay.
we'll take that. With the income driven repayment plan, 10% of your income. So if you make $1,000 a month, your payments can't be more than 100, but you get credit for everything. You get credit for the number of family size, if you're married. So a lot of times you can end up with a payment that's $30 a month. And so now you get that income driven repayment plan, and you get your credits and stuff because you have kids, you're married, have a family. You have this low payment. Now we, instead of having to attribute, you know, a 600 payment on 60 grand in student loans, we can get you to a true payment of 30 or 40 that you're realistically paying. And make those payments. If your student loans are behind, they're the easiest to fix.
Okay.
Though you should call them, they're the easiest to bring back current.
Okay. Okay. Any
So
last tips or suggestions?
I tell you what, be patient, don't make rash decisions, think long term.
Yeah. Yep. I think
That's
that's best advice.
I'm telling you, a
Yeah.
lot of times it all boils down to people just getting mad and making a rash decision to quit
Mhm.
that job, or making that rash decision to, I'm not paying for this cell phone, or I'm not paying this cable bill. And they're not thinking long term, that yes, I don't want to pay you $100 now, but this $200 is going to stop you from getting a home in 2 years.
Right.
And if
Right.
in that moment when you're home, if somebody told you, you, hey, you pay $200 and we can get you this home, you'd no if ands or buts pay it. So just go
Mhm.
ahead and get it taken care of now and say you ain't getting my business anymore, you know?
Exactly. Yep. And I think another piece would just be plan, prepare, because if you fail to plan, you plan to fail. We hear
Fair.
it so often,
Yep.
but you can't rush and buy a house unless you have just a lot of money saved up. And even then, you still need to go through the proper checklist, go through the proper channels, and find a really good home, not just any home, because then you will
Right.
pay for it later, even when you don't think so. And then you'll say, man, I should have thought more through when I purchased this home, or um, go through all the proper questions, and then we're happy to answer, make modifications as necessary.
Absolutely.
You just want to make sure that you plan, you ask questions, you purchase with confidence. And because you do want to love your home. I know Tate talked about
Right.
he just bought a home, and I'm sure if he thought about it, he's like, I would do it again versus I never wish
Right.
I would have. So
Right.
that's very important, because that's an expensive mistake if you're paying all this money for a house that you really don't love. So that's why we specify that here. Definitely reach out to Datavius or Tay Smith, Marine Credit Union. We'll put his contact information on the page. You can reach me, myself. My contact information is on the page. But at any time, contact either of us and we'll get you in touch with the other so that we can help you find a home that you love. Signing off right now. Tay, thank you so much
Thank
for
you.
being on the channel here today. And we thank you so much for those who joined and watching the replay. So have a good
Right.
day, everyone. Talk to you soon, and we'll love to
Have a
help
good
you
day.
with your
God
next.
bless.
All right. Bye bye.
Bye.